All right, welcome back to another edition of Melly Got News. So we're going to get it started for today. Hopefully, you got your coffee with you. I'm actually trying a new creamer today. It's called chocolate creamer or something like that. Yeah, it has its flavors here and all. Let me know what you think about it. It's a great value brand from Walmart. Just let me know what you think about it. I tasted it, and it's okay, but it ain't my cup of tea. All right, so hopefully, you got your coffee with you today. So let's go ahead and get it started. All right, as you can see, the S&P, Dow, Nasdaq, and futures are all down. We got a rough start for a little bit of a start to the morning time. So it's about 18 in the morning. So you see what the futures holding just about a little bit over an hour by now. Okay, so let's see what that holds. All right. All right, take a look at some of that foreign currency trade off. You see here the euro versus the U.S. dollars a little bit up. All right, switch over to the 10-year bond. Look at the 10-year bond. It's holding at 3.5700. The VIX is up. Some more currency. The GBP versus the US dollar is down. The US dollar versus the Japanese yen is up. All right, then you see that Bitcoin. Bitcoin is down, but up overall. You see CMC crypto is down. The FTSE 100 is down, and the Nikkei 225 is up. All right, so that was from YahooFinance.com. A little early morning look. All right, so that was from YahooFinance.com. All right, as you can see here, you see this is from Kitco.com, right? Kitco.com, the precious metals market. See, look at that New York spot price. We see gold was up over the Friday. It was up on Saturday, and then Sunday morning happened, and next thing you know, gold got drugged down. Precious metals, all right. So a little bit of mixed here. You see the it's down under $2,000 again. Gold is down $21.40. Silver is down 21 cents. Palladium is up. Platinum is up, and rhodium is up as well. That's that New York spot price. All right, but take a look at that world spot price. This is the world spot price. The markets are open up, and see they're trying to drag precious metals down all across the board. Okay, the only thing that's up is rhodium. All right, but we'll see what they do with the precious price, the dollar fixed price of precious metals. If you can see here in this corner right here, you can see it's based in U.S. dollars. All right, this is what it is. But if you switch it, you can see you can base it on all sorts of other currencies. All right, so don't just think this is just the U.S. dollar. All right, so there we go. And this is from Kitco.com. All right, Kitco.com. So let's get into the actual news here. And as you can see, the headlong rush to get out of the dollar is in full swing. All right, many people are thinking you crazy, you attend for a Kufi hack, conspiracy theorists. Okay, punch up all these news channels, and if they come back and say, well, it ain't on the TV news, regular news, so I guess it ain't on, the big cable news channels. Don't argue with them. You don't have time to argue with them. You know what's going on. We're past the point of trying to save people, so just get yourself. All right, but this is from Russian-briefing.com. All right, Russia-briefing.com. Right, Russia and Bolivia dump U.S. dollar and trade agreement increases. All right, so there Russia's making deals. All we talk about over here is the Molotov virus. The virus that can tell time, how to sit there and send DJT to prison and everything else. All right, they're fixated on that. Meanwhile, the rest of the world is talking about they're talking about trade agreements. They're talking about rebuilding the world, cleaning up the oceans, cleaning up pollution, reforestation of the world, and all we talk about over here is bull crap. All right, so get this autograph. This is from Russian-briefing.com. All right, Russia-briefing.com. All right, continue with our theme overseas here. As you can see, Argentina seeks BRICS entry into China and Brazil meeting. All right, so if we go back to this last article here, focus on this one. Bolivia is here in what they consider the Western Hemisphere, and then we turn around and see Argentina and Brazil. Brazil already applied to join BRICS. Argentina's joining BRICS. I don't care what they tell you. The rest of the world is getting their crap together. We only have 3 allies left. Mexico and Canada, and as one of the new, it's one of the last vlogcasts that just said Mexico has applied to join BRICS. All right, maybe they already done it and they just not broke the news. Okay, so we're being left in the cold dark, and as many analysts pointed out years ago, the crap that we've started, that we've caused the world over the many decades, is now coming back to roost. All right, the chickens are finally coming home to roost. We need to accept that fact that we've screwed over so many of the world, and now everybody's coming back on to us, okay? So think what you think. This article is from BuenosAiresHerald.com. All right, BuenosAiresHerald.com. If we lose, we've already lost Western Europe. We lost Eastern Europe. Western Europe is going on to the BRICS. Southeast Asia, Australia, everybody's going on to the new BRICS and leaving us hanging out to dry, okay? So expect for a flood of dollars to come back here for euphoria as we got all this money, and then all of a sudden, next thing you know, it's come crashing down with ultra hyperinflation, all right? So get this article out. This is from BuenosAiresHerald.com. I've been trying to shake this cold forever, but then as soon as my allergies kick out, motor grass and it is on. All right, so here we go. Article this from the Wall Street Journal.com. The Wall Street Journal.com. Credit Suisse investors challenge Switzerland's 17 billion bond right now. They got issues over there. We've left this issue alone, but ever since UBS take over Credit Suisse, they've been having major issues. This is far from over. It ain't over yet. They've had to do some major stuff behind the scenes and behind closed doors to get this deal done, and it still ain't over because many of the investors in UBS are heated. Many investors in Credit Suisse are heated. Everything is falling apart, okay? So we'll keep a close eye on this story, all right? This is from the WallStreetJournal.com. All right, let's take a look at the good old USDebtClock.org, okay? So we're going to go ahead and switch down here. We're going to show you several things. Have you noticed, look at total U.S. national assets and total U.S. funded liabilities, unfunded liabilities. Instead of being in the negative on this one, we're actually operating in the black, all right? We're not in the red anymore, we're in the black. All right, so we got just barely the total U.S. national assets, money-wise, currency-wise. You can debate money and currency. All right, so we're actually operating in the black just barely, okay? Very, very, just barely. But let's switch over. I got to move the camera over here a little bit, though. So we're going to switch over here a second. And let's take a look at over this area right here. You see dollar to oil, zero. Dollar to gold, zero. Dollar to silver, zero. All right, so if you look at here, this is not changed. This went off in February, and it has not changed one bit. All right, per barrel. All right, so that lets you know that something's big. Our dollars ain't worth crap, and don't matter what they tell you, we've lost the world's our currency status. All right, and then take a look at here. Total debt to GDP ratio, we're operating at 133.7997%. Call it 134% debt to GDP ratio. Okay. We are a corrupt nation. Let's call it what it is. No single living, breathing man or woman being can go to 134% debt to GDP ratio. You have everybody and mama coming after you. Enough said about that one right there. That's all you need to hear that one. Oh my goodness, this is bad. All right, so get this out. This is from USDebtClock.org. All right, then we switch over to KingWareNews.com, and this was a big one here. There is no physical gold or silver available in any quantity. So we'll switch down to this article a little bit. This is a very interesting article. All right, watching the price of gold in the last few days has been interesting. Every time the bullion banks try to mark it down, the buyers come in, and the price shoots up. Today, it took a dive. It took down to $1,969 before it bounced back to $27 in a matter of a few hours. So, based on this article here, every time these folks, what they do is, and this is what I've done my research on. Let me know what you think in the comment section. What they do is they see the price go up, and then all of a sudden they take a bunch of paper contracts and they just dump them onto the market, driving the price down. And what's happening is when they do that and they drop the price down, they're waiting buyers who want to take delivery of their physical. They can hold it in their hand, they can touch it, look at it, kiss it, smell it, whatever they want to do with it. They come in and buy it up and actually take delivery of it. So whenever they dump these paper contracts, take a sweet coffee, and drive the price down, let's just say us little folks actually come in, and us little folks and even some of the big heads folks, they come in and they buy it up. So we got a tit for tat going on. We got those of us who are waiting on the price to drop, and as soon as it drops to where we can afford it, even in some of the big wigs, they go and scoop it up and force the paper and force the price to go back up, thereby nullifying the fact that they're trying to suppress it down artificially, all right, and intentionally and criminally. All right, so get this article out. This is from kingworldnews.com, right? Kingworldnews.com. All right, then we got an article here from HowTurner.com, HowTurnerRadioShow.com, HowTurnerRadioShow.com. I haven't seen this yet. Speaking, I haven't been to my local credit union or bank and try to take out a loan yet. But if this is something that's going on because the banks are hurting, we got rumors of emergency meetings happening left and right. They got rumors of emergency meeting at the Kansas City Fed that took place. And if credit is drying up, boy, we're in big trouble. Trying to get a new car, even a used car loan, especially, it's going to be hard. It's going to be hard to hit. All right. This headline says it all. If we're in deep trouble, stop paying attention to those empty suits and dresses on TV and get out and actually start reading. Let's all get out and start reading. Start looking at the page, what's going on. Actually get off the internet, off your social media accounts, and actually talk to people. They'll tell you what's going on. I've talked to many folks in where I live at, even some people where I don't live at, even some folks that are considered well off and even rich, that they've come out and said, we start talking, and they've admitted, hey man, we're struggling too. We're very struggling. I heard this from many folks say we trying to give the appearance that we holding on, but we're barely holding on, okay? Things have gotten out of hand. All right, so we're going to let that elaborate, let that sink in and marinate. So I want to thank you for joining us in another edition of Alabama News. Please be safe, be sound. Remember, take care of yourself first, then your neighbor, then your family, then your neighbors, then your community. Reach out to other communities, okay? Remember, you're your own best financier, your own best credit union, your own best savings and loans, right? You're your own best banker. Once again, thank you for joining us. That's just Alabama News. Remember, like, subscribe, and comment. Hit that notification bell. Share this video with everybody else so we can try to save. Even though I said it's too late to save people, we can try to save as many as we can until the very bitter end. All right. So that being said, thank you for joining us. That's just Alabama News. Like, subscribe, and comment. Hit that notification bell. Share, and let's get started.